and whether retail trading platforms need to do a better job educating their users. This is coming into focus even more after the rise and fall of stocks like GameStop. Joining us right now to talk about this is John Hope Bryant. He's the founder and CEO of Operation Hope. And John, I know you've spent some significant time kind of digging into this and trying to come up with some solutions for what you think is a big problem.
Yes, thanks for having me this morning, Becky and the team. I think we're seeing in a moment in history right now. You know, history rarely feels historic when you're sitting in it. It just sort of feels like another day. But when you combine the mortgage prices of 2009, which took a minute to percolate, which was about the debt of people who really didn't understand the agreements they were going into, and you provide this moment, which is about equities, and folks who really, once again, don't really know what they're getting into, I really think it makes a case for financial literacy as a new civil rights issue of this generation. As important in many ways as the right to vote was in the 1960s. You know, as important to what you all do as, you know, a driver's license in the equities market. We should not be, in my opinion, Becky, this should not be a private card game in Monaco with unique information for unique players. This should not be a public, you know, slot machine in Las Vegas. I keep reminding people Las Vegas keeps getting bigger every year, even though a few people win, where folks think that this is gambling. And this shouldn't be a kid in his room gaming and calling it investing. This is the proper formation of capital. You know, this is the American way. And we should treat it as such. And we should give people at the bottom an opportunity to come up and not just squeeze them in the middle. And I think what happened with GameStop, and I think to a certain degree we're piling too much on one company and suggesting that one company is a problem here. And really the whole industry, I think, needs to put on the white hat here and self-police themselves, because no one's providing financial literacy education to their customers. I think this also proves that technology alone is not enough. People, to the point of customer service and talking to somebody, which is what we do at Operation Hope with financial coaching, is really important. We raise credit scores 50 points for people in 6 months because we talk to them and engage with them and understand their situation, and we use technology to do it. But it's still about the people.
Yeah, I think that's a key part. John, in the steps that you've kind of laid out for what you think should be a plan for these brokerages to take, I'd put them into two categories, either financial literacy on the one hand or transparency on the other hand in terms of that. You want to start with some of the financial literacy things that you think the brokerages should be doing?
Yeah, we call it, we sort of call it the Operation Hope Investor Bill of Rights. It's a 10-point plan. And I think the industry should fund free financial education for all consumer investors in the case of Wall Street, on Main Street for all banking customers. I think that we should embed this. Don't make it public affairs. Don't make it community affairs. Don't make it PR. Put this right in the middle of your business plan, which is point number 10, by the way. It's part of the business plan. But embed this into the customer acquisition process. It doesn't have to slow anything down. But give somebody an off-ramp. Let them stop, ask them key questions about whether they understand what they're getting into. You can do this very quickly. If they're stumped, if they're curious, if they believe this is a flight to heaven with no stops and there's guaranteed success, stop. Because that's not Wall Street. That's not investing. There are risks. And then let them talk to a coach, Operation Hope, or somebody else who's qualified. Then they can come back to the transaction. Doesn't have to slow anything down. And then let's give them some inspiration and some motivation. Let's do some video engagement at the front of this process. Walk them through the fact that this is serious and don't bet your rent money, including on Bitcoin, okay, by the way. And then I think at some point there needs to be an opportunity for somebody to walk away or double down on their desire to invest right now. And I think you're going to have a more responsible investor. I think you're going to have an educated investor, somebody who, if they mess up, look, I think Joe will love this. If somebody is educated and they lose it all, that's Wall Street. That's business. But let's make sure that is not what people don't know that they don't know that's killing them, but they think they know. And then I actually borrowed a couple of comments from Andrew on transparency. He wrote a great piece last week on what the industry can do on the transparency side. Why go to a private meeting and get private information and not have that disclosed on your website? If you go meet with management, just disclose it. so that nobody accuses you of insider information. So let's stop manipulating the market and give people an opportunity to come up, because my rich friends need my poor friends to do better if only to stay rich. And we need the poor to come up, because that is the American way. So it's a 10-point plan. You put it on your screen, so I won't walk through each of the items. But essentially, it's giving people basic financial literacy education, investor education, at the client account creation and transaction beginning process. And at every step of the way, there's a chance for people to get off the Ferris wheel if they're uncomfortable. So that, again, we're raising up new American builders. And I think that will go a long way to adding sustainable GDP to this country.
Hey, John, two points with this. I can think of critics coming at you from two directions. One would be from the traders themselves, who say, you know, stop being paternalistic. I know what I'm doing. I know this is a risk. I know this is money I might lose. Stop trying to slow me down or say that I have to get a license to do this or do anything else. You're getting in the way of the democratization of Wall Street, and that is something we want. We want these people there. What would you say to the traders themselves who might push back?
Bill Clinton had a great quote, President Clinton. It's hard to get somebody to agree to the truth when the lie is paying their paycheck. I hear you, but just because you're rationalizing, it doesn't mean that a rational lie makes sense. The GameStop thing is a great example of how that logic doesn't work, really. You had people with too much information on one hand, hedge funds, in this particular case, who understand the markets. And you had people with their head on backwards, millennials who were tech savvy, who were intended on gaming on the other end. It's a war, and my clients are in the middle. And they're saying, all they're seeing is social media posts that say, because they called me, saying, this is a $1,000 stock. I can't go wrong. I'm going to put my rent money in it. I'm going to put my whatever money I've got, my little savings in it, because this is my one shot to get rich. And it goes up. They buy it at 500, right? It's a $50 stock or a $30 stock, right? They buy it at 500. They buy it at 700. Okay, but who gets caught between, you know, whatever the high was, down? I think it was 458 was a legitimate high, down to 48. I mean, where is it now? 56, 60 bucks. If you sell it, you bought it 400, and you think it's 1,000. You sell all the way down. There's millions of people right now wondering who lied to them. So, and there's somebody with a yacht, including people that, no disrespect to Reddit, but they did raise money on the back of all this. By the way, God bless them.
Right.
But it's not like they hate the markets. They just raise money from the markets. Let's knock it off. Let's stop the game and give everybody the same rules to play.
John, we're almost out of time. We've only got about a minute left. But the other issue is going to be, you're looking for the industry to self-regulate themselves. As Andrew pointed out, you can't even call Robinhood and get somebody on the phone. Good luck with that. What's going to inspire them to do this, especially if it's self-regulation? Well, I think rainbows follow storms. You know, you cannot have a rainbow without a storm first. No regulator came into vision because people said, let's have one. The SEC, FDIC, all these people came into place because of a crisis. I'm saying self-regulate before there is a regulator who comes in. And to their credit, by the way, I'm going to say Robinhood called me last October, I believe it was, to ask for advice. And this was one of the pieces I gave them. The only thing I criticized that model for was they should have embedded financial education from day one, their first trade, their first account. I like the innovation. I like the new ideas and the way that it's fascinated young people. There's even a rap song out, by the way, yesterday about SPACs. I mean, I like that this is all because we're making smart sexy again, but let's do it in a responsible, intelligent way. I don't think anybody was malicious at Robinhood, and I don't think there's anybody malicious at Charles Schwab or wherever. But you live in your own bubble, and the rest of the world's not there. Let's give them a safe passage into your bubble by giving them somebody to talk to and some education that empowers them. John, it's good to see you this morning. We're out of time, but I'm sure we'll talk to you again soon.
Thanks for having me.
All right, coming up, Senator Ben Cardin is going to join us to talk small business relief and the latest out of Washington on stimulus.